Hello, everybody. Welcome to today's webinar. I hope you're doing well. This is Jeff Gibby, the Director of Sales here at Metastock, and we're gonna go ahead and get started right now. Hopefully, you can hear me okay. I hope everybody's doing well. Let's go ahead and get to the legal disclaimer. So here we go. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by the investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So today, as you know, we have a very special guest. His name is Ryan Capaccio. And one of the, I'll say a few things about Ryan. Sounds like you're here, Ryan. How you doing?
Yep,
Ryan?
Jeff, pretty good.
Great. So I'm going to say a couple things about you. You're welcome to chime in if you want. Number one, you look quite young. How old are you?
I'm 30.
Okay, yeah, that's a little younger than I am. Two, you've got one of the things Ryan does on a regular basis is he sends to me pretty good stock picks using the software he's going to show you today, and he does a really, really good job of kind of running not only Metastock, but he does some. I think, how would you quantify what you're doing, Ryan?
So the Simplicity company is divided into two parts. Part of it we do with you guys with Metastack, and the other half is general consulting on people that want to trade their own money.
Okay, all right. And there you go. That's what I have to say about Ryan. Ryan, I'm going to go ahead and turn the time. Are you ready?
I am ready.
Okay, so I'm going to go ahead and turn the time over to you. Let's go ahead and get the presentation over to you first. So you should get a pop-up right about now. And I can see your screen. It looks perfect. Um, we'll have you go.
Got it? All
Get out
right,
of
good
your
to
way.
go.
Okay, thanks.
All right, well, let's jump right into it. So as Jeff said, my name's Ryan Capaccio. I'm co-founder of Simplicity Trading Systems, as well as managing partner of Capaccio Trading Company. Now, like Jeff tried to describe, what I get a lot is a question on what's the difference between these two. So Capaccio Trading is an equity trading firm where we put up our own money to trade large, mid, and small cap stocks, which means that we only trade at Capaccio Trading. But every trader knows that to stay profitable, you need a really good system. So where does our system come from? That's where Simplicity comes in. Simplicity, we create trading strategies that are designed to shorten your analysis time and also predict future movements, because we know that technical trading can take up a large portion of your time and can be very, very subjective, which leaves a lot of people feeling confused with nowhere to turn. So all of us at Simplicity set out to change this, and that's when we teamed up with Metastack to create the Endeavor add-on. With Endeavor, you'll be able to stop reacting to stock movements and you start preparing for them. So what do I mean by this? Well, as some of you probably already know, at Simplicity, we take a slightly different approach to trading than most, because we don't believe in telling you how to trade. Instead, we tell you how price is going to trade. This way, we're empowering traders to make their own decisions. So you don't have to feel enslaved to TV programs or chat rooms for people's opinions that are going to be passed along as facts. If you yourself know how price is going to trade, then you can decide for yourself if the movement that's about to happen fits your unique trading style or your overall investment profile. Okay, so now you know a little bit more about us and what we stand for. Let's talk about why we're here today. We're going to focus on three topics. Number one, how to pinpoint the best time to take a long-term trade. Number two, how to adapt your long-term trades in a changing market. And number three, how to identify the best long-term trades in less than 15 minutes a day, a personal favorite of mine. So the best part is our Endeavor system is going to do all the work for you. We do every one of these tasks. Our signals will show you when price has the opportunity for a long-term trend, and when you should adapt your trade to the changes in the marketplace. As well as we're going to give you an easy way to identify long-term trades in as little as 15 minutes. Our goal is to very simply make your analysis simpler, which is why our system doesn't have any indicators to interpret. Now, like everything else in life, if you're new to the system, it will take some time to learn all the ins and outs of it. But we're going to work with you to make sure that you have everything you need to succeed. The only thing that we ask is that you give yourself enough time to let the system work for you. In fact, if you commit to us, we're going to commit to you. And I'll show you exactly what I mean by that at the end of the webinar. But for now, you're probably thinking, okay, well, this all sounds great, but where do I start? With our simple three-step system, where we're gonna break down our trading process down into 3 easy to follow steps. Categories, step 1. First, we identify the big picture movement. Is price going to trend up or down over the long haul? If price is likely to trend up, then we move on to color codes, step 2. We identify the correct upward movement. Is price going to move up for the long term, a short term, or is it going to be a rebound movement, commonly referred to as a swing trade? Once we've identified which upward movement price is going to make, then we move on to smart getouts, step 3. Identify the right time to exit. Knowing when to enter a trade is important, but remember, getting out at the right time is what's going to actually make you the money. So before we go in, we identify our exit strategy. When you put all 3 of these steps together, you're going to start to see a system that is designed to put the probability in your favor while keeping you focused and unemotional, because there's no guessing involved. So let's go ahead and break down these steps and go through them one at a time, starting with our categories. Step 1, identify the big picture movement. And this is how it works. After you've selected your security, we categorize price as either Endeavor or Discovery. The Endeavor category represents potential upward trends that could reach their all-time highs. However, the Discovery category represents potential downward trends that are likely to consolidate at their lows. But with these classifications, you'll be able to tell at a simple glance if price is more likely to have upward or downward trends. Now, let's jump into Metastock for some live examples. You'll notice here that on the bottom of these charts, it either says either Endeavor or Discovery. This is what Metastock calls a ribbon, and it's going to be automatically placed on every chart you bring up as soon as you apply our Endeavor and Discovery template, which I've already done here just to save time. When the ribbon on the bottom is dark gray, like it is here on American Eagle and Seaworld, that represents the Endeavor category. When the ribbon on the bottom here is this light gray, like it is on Penn Real Estate and GameStop, that represents Discovery. Okay, so step 1 is all about identifying if price is more likely to trend up or down. And remember, that's exactly what the Endeavor and Discovery categories do for you. We can see here that the 2 stocks on top are in the Endeavor category, and they have been in beautiful uptrends for months. However, the 2 stocks on the bottom are in the Discovery category, and they've been trending down for not only months, but years. Let's look at these guys individually, and we can dive deeper in. First, I'm going to start with American Eagle, which is currently in Endeavor. Let's back this chart up here so we can get a full view. Now remember, the first step here is to get a good wide angle lens view on how price is trading. We're not going to go into the minute little day-to-day moves. This is for big picture. We want to look at when price here is in Discovery. We can see that it entered in there in looks to be most likely December of 2016. It stayed in until September of 2017. And price was moving down that entire time. It didn't start its upward trend until it entered into Endeavor. And that's it. That's all this step is meant to do. It's meant for you to quickly realize, is price more likely to fall and consolidate like it did here? Or is it more likely to start or continue to rise? Let's check out another example. Let's look at Penn Real Estate. We just looked at one that's currently in Endeavor. Let's look at somebody that's in Discovery. Blow this up. I'll zoom back. So this one, we can see that we entered into Discovery in October of 2016. And other than this little blip in June and July of this year, it stayed in a Discovery the entire time. So why is this important? A lot of people will look at this and they'll say, yeah, but I could tell this stock is moving down and look how cheap it is, right? They're gonna say, I would have never bought it as it was falling here, but now this stock is so cheap that I'm gonna buy this for the long term. It's likely to go up. That's exactly what the Endeavor and Discovery categories are gonna stop you from doing. We want you to look at this and say, hey, this stock is more likely to either continue to trade sideways or continue to move down. Now, let me show you an example. If you look at this and you say, okay, it's at 1065, this is very cheap. By that same logic, as soon as this stock entered into Discovery, it was cheap here relative to its high. But as time went on, it was also cheap here and here. And even if you took this little outlier on 518 of 17, if you were to say, okay, I think this is it, this thing's gonna start moving up here, its downfall is done, I'm gonna buy this at the close. The close was 1033. Right now, over a year later, price is only at 1065. We're talking about a difference of 30 cents in an entire year of holding this stock. It's 100% what you want to stay away from. When you're looking to buy a stock that's low, we want it to immediately start to move up. We want it to have that opportunity. And when we look at stocks that are in Endeavor, we see that opportunity. Let's back this up. This one's Seaworld Entertainment. We can see that price entered Discovery in June of last year, and it stayed into, let's call it January of this year. Now, price here was less moving down and more moving sideways, but that's still not the best time to take a trade. We want to, remember, enter and immediately start some movement. Price doesn't start to move up here until it comes into the Endeavor category. Then we see it start to take off. And that's all the analysis we have to do at this point. We're just bringing up a stock, applying the template and saying, am I in Endeavor with the likelihood to move up, or is it in Discovery? Am I more likely to consolidate or move down, right? We want to put the probability in our favor. Last example here is GameStop. Let's back this guy out because this one has been in Discovery for a while. This one entered in November of 2015 and has stayed in the entire time. Now, if you take a close look at this, what you're going to notice is that this stock has a very distinctive pattern. It gaps down and rises. It gaps down and rises. Gap down and rise. We have another one here in August into September, gap down, it rises up. And right now, it's rising up, but without that gap down. It's very important to remember that we're not saying that stocks can't move at all while in Discovery. We're just very plainly saying you're not going to get that large upward trend. The kind of thing where you can put your money comfortably in it and you're going to see that 20 to 40% upside. You can very plainly see when you look at these stocks that you are on an overall trend here, moving down or consolidating. Now, that's not to say that this stock 2 weeks from now or 6 months from now won't be an Endeavor. Its situation can absolutely change. In fact, stocks are cyclical. They're almost guaranteed to change. And we can see that when we bring up any of the examples of stocks that we just looked at that are currently in Endeavor, like American Eagle. It was in Discovery. Something has changed in the price action. Our algorithm will identify that and immediately put it into Endeavor. And then you see our trend start to begin. Now, it's important to remember that this is just step one. You don't want to buy a stock just because price entered into Endeavor. All we're doing here, like I said, is simply identifying if price is likely to trend up or down. And by now, I think you kind of get the point. If price is in Endeavor, we're likely to trend up. And when it's in Discovery, it's likely to either consolidate or trend down. So let's jump back into the presentation. First, I'll get rid of these guys. Close all, save none. So now that we know that we're only going to focus on stocks that are likely to trend up, The question then becomes, what kind of upward movement will occur? Which brings us to color codes, step 2. Identifying the correct upward movement. And this is how it works. Inside Endeavor, colored signals represent the movement that's most likely to occur. Now you can predict future movements without having to interpret indicators. We've identified basic movements that price will make while in the Endeavor category and labeled them with colored signals, making it perfectly easy for you to recognize them. Now each signal is going to appear as an arrow located below price action. Green signals represent long-term trends. Blue signals represent short-term trends. And black signals represent price making a full rebound back to highs. With our colored signals, you'll be able to predict how price is likely to move within seconds of looking at your chart, saving you valuable time since once again, there are no indicators to interpret. Now today, we're only going to focus on the green long-term signal. So when a signal appears, you can now identify what type of upward movement price will make. But before we jump into Metastock for more live examples, we should also talk about where and when is the correct time to exit. Because as we talked about in the beginning, you don't actually make any money until you exit the trade. Which brings us to smart getouts, step 3. Identifying the right time to exit. Smart getouts provide a realistic view on where price is likely to move before an exit is necessary. Their goal is to prevent traders from overreacting to the natural swings in price. Our smart getouts come in a variety of different forms, but today we're only going to focus on the early warning signal, which identifies when a downward movement in price may occur during an upward trend. Or simply put, they identify price dips. Early warning signals are going to be represented by red diamonds above the price on charts. So, if price is categorized as Endeavor and trending up, these will tell us when price is about to dip down. Now, sometimes early warnings can be useful in predicting how far down price is going to fall. For instance, when you get multiple red bars leading up to an early warning signal and its trigger points taken out, you can absolutely expect a 2 to 5% dip in price. Now, today we are going to focus on long-term moves, but I also want to show you at least one example of how the early warning signal can help you when managing your long-term trend. So now let's jump back into Metastock for our examples. And I want to start by bringing back up the two stocks that we were looking at earlier, Seaworld and American Eagle. If you remember, these were the two stocks that were in Endeavor. What we want to do now is back up and find out what kind of signal they had when they came out of Discovery and first came into the Endeavor category. Now, I'm sure you've noticed that sometimes price comes out of Discovery and then into Endeavor for just a few days. Let me show you an example. We'll look at Seaworld first. We're going to zoom in and we'll scroll back to right when price started to do that. We can see here that price was in Discovery. It came out for just a few days. It pops back in and it eventually went into Endeavor for a final time. This is where our signals come in. If you don't have a signal, you're not going to take a trade. To find out if you have a signal, all we have to do is come up here to our expert advisor. Now the signal that we're interested into today is green. So we click on number 2, Endeavor Green. We hit attach. We know green because that stands for our long-term trend. Close, and there's our signals. We'll back up here to get a much larger look. Do you see what I see? This is going to be a perfect example for just a little, in just a couple minutes here. What we have is multiple red bars leading up to early warning signals. So although our green signals are going to tell us where to exit, in a couple minutes, we'll go over how these are going to help us, or our green signals are going to help us enter. We'll go over in a couple minutes how these signals are going to help us exit. But for now, Let's stick with our long-term signals. Now, just because you get a green long-term signal doesn't mean you jump into a trade. All of our signals need to be confirmed first. So the very first thing you want to do when you apply Endeavor Green is you can come down here and we can see that we have a green long-term trend signal. How do we know that? Well, anytime you scroll over, it's going to tell you green long-term trend. The first signal happened on 116, and then we get another signal on 123. So how do we tell if a signal is confirmed? Well, for that, we're going to come up here to View, Expert Commentary. Now we are going to get a wealth of knowledge in this commentary. We'll start at the top and we'll work our way down. So first and foremost, we have the ticker symbol SEAS.K, which is Seaworld. Then we have today's date. We know it's today's date because you always get a little marker represented by a downward pointing arrow on today's date. Next, we know that we are in the green expert advisor, and that's the signal that we're paying attention to. We also know that, simply put, green signals represent long-term trends. However, if you want a more in-depth definition, then we have that as well. Green signals represent price building strength after transitioning from major lows. Well, we know that's true because we just saw how far down price had moved in discovery. Price is likely to develop an upward trend that can last from months to years. Perfect. We're looking for long-term trends. That's exactly what we want. But what do we need? 3 consecutive closes above the trigger point are needed to confirm the signal. The third consecutive close is marked with a green 3. This is a crucial step to the green signal. And we do this for 2 reasons. Number 1, we want to give you at least 3 days to start doing your fundamental research. If you're going to be entering a short-term trade, I'm not a big advocate for knowing exactly what the company does. But if you're going to put your money in something for multiple months, we want to give you the opportunity for you to have the time to do that research. So you'll get a minimum of 3 days between the actual signal occurring and then a potential confirmation. Also, we want to make sure that price can stay above our trigger point for a minimum of 3 days. So let's talk about the trigger point. Anytime you get a signal, anytime you get a green signal, it has to be followed up by price staying above our trigger point. So in this case, the most recent signal was on 123. We can tell that because our green date here is 123, which means our trigger point is 1443. I'm going to go ahead and mark that on the chart. 14.43. I'm also going to make that line green. Okay, so now what we want to see, so this stock can prove to us that it has the strength to move up for the long term, is 3 consecutive closes above this line after our signal. So we can see this is day 1, the next day is 2, followed by the next day 3. Now, if you don't want to apply the line and you don't want to do the manual count, that's perfectly fine. All you have to do is wait for the green 3 to pop up, which means when we got this signal on 116, we were in no danger of price falling because this is a green signal without its confirmation. So when we got this signal the next day, looks like for the next 2 days, we fall into discovery, but that's perfectly fine with us. We are in no danger of taking that trade. Price finally pops into Endeavor. Okay, that's great. Now we know it has the opportunity to start moving up. We get a long-term signal followed by our confirmation. We're good to go. The next step would be identifying where our smart getouts are, right? We want to start with that smart get out philosophy. Well, we give you the long-term exits. For long-term trades, use 1293 to 1245 as your stop loss. Action is only required if price closes in or below this range. So let's mark that range. Let's grab a line. We'll put the first one at 1293, 12.93. Say okay. That's our top range. We'll make our bottom range 12.45. Okay. Now, we also give you other useful information. For instance, we show you the average true range, which is represented by ATR for both the 15-day and the 120-day. We also give you volume for today and the average volume on 120 days. And then this is my favorite part. Let's say you're new to green. Let's say you've never heard of this before and you watch this webinar, but you need more information. All you have to do is come down here and click on the tutorial link. This is going to direct you to the tutorials page on our site. Here you can get a variety of videos. You can watch a video that explains every single signal that Endeavor has and how to use them, or you can get specific. You can come down here and you can watch a video on just applying Endeavor. You can also get individual videos on the signals. For instance, again, let's say that you're new to the green signal. Well, you can watch the beginner's guide to long-term upward trends. Or let's say that you've used the green, you perfectly understand it, but maybe you took the summer off and now you've come back to it and you want just a really quick reminder video. Well, we can explain green to you in 5 minutes or less as well. And we do this for all of our signals, our short-term signals, our intermediate signals, and our smart get out signals. But for now, let's get back to our trade. So let's recap. We know that price moved out of discovery and into Endeavor. So now it finally has its opportunity to begin moving up, but we need to know how it's going to move up. And then we see that we got our long-term signal. So now this tells us, okay, if I wanted this for the long term, I have the opportunity to have it. But I needed to close above its trigger point for 3 consecutive days, which is right here, 1443. We know that as soon as we get our green 3, that tells us that our green is absolutely confirmed, and we can look to enter this trade. Let's get rid of our commentary now. Now, the thing that I like to do is I like to look for a minimum of 20% in my long-term trades. If I don't get at least that, it's not really worth it. I know that I'm gonna be putting up a large amount of money for a decent amount of time, at least 3 months or more. So that's my qualification. I look at this and I say, okay, if I buy in here at the close of our green 3, at 1465, do I have a 20% upside? The way I judge that is I take the most recent high and I try to identify if it's possible for price to get up there. I'm never looking for it to exceed it. If it does, that's a happy accident, but I'm always using that as a marker. So if we're entering at 1465, it means for a 20% upside, price would have to go to 1758. So let's mark that on the chart. 17.58. Okay. Now we have our entry price. We know what our risk is. We know that our reward is possible because that's well below this most recent high there that came from November of 16. So I'm good to go. And if you would have entered this trade, you would have been in it for 1, 2, 3, 4, the beginning of your 5th month when it hits your 20%. Now, this stock absolutely continued higher. That's just me. I use 20% as that bearing to know that that's my minimum projection. I don't always sell out at 20%. However, when looking at this being one of the first stocks taken, or the first trades taken in the beginning of the year, as soon as I got 20% on this one, I know how I trade, I would have been gone. But let's assume that that didn't happen. Let's look at this from someone else's eyes. They said, hey, I got my 20%, but this stock absolutely has a history of trending, so there's no reason this trend shouldn't continue. But you need to always be thinking in terms of smart get outs, right? Where is your exit strategy? So if 20%'s gone, now what do I do? Well, that's where our red bars and early warnings come in, right? We said earlier that if you get multiple red bars leading up to an early warning signal, now we know this is an early warning signal because when you scroll over, it says early warning price dip. That's what they stand for. If our trigger point for our early warning signal is taken out, then we can absolutely expect a 2 to 5% dip in price. And a stock that trends well like this with multiple red bars is very, very likely to fall 5%. So what I would look to do is if the trigger point here is taken out, that's when I would exit. Because I know I well exceeded my 20%. And if you use a half and half strategy, if you hit 20%, you sell half, you let the other half ride, this is 100% where I would exit. So let's look at this guy. we have the early warning signal that happened on 6/25 of 18. So let's backdate this and see exactly what price would have looked like on this date. I'm going to detach this and I'm going to come down here, go to 6/25 of 18. Now I'm going to apply, last time we had green on because that's what we were looking for, but this time we're interested in our early warning. So we come down here, number 7, smart get out, early warning, hit attach and close. Now we get an alert box. This is telling us this is what the price would have looked like on the day that this occurred. It says early warning occurred, price is likely to experience a dip during an upward trend once its TP, which stands for trigger point, has been crossed. Okay, well, where do we get our trigger point? Just like before, since we're clicked this time on Smart Get Out's early warning, we come up here to view, expert commentary. And these commentaries are going to have the same look and feel, right? We're going to start with our information on what stock we're looking at. We're going to get the definition of early warning, which we already went over. And we're interested in our trigger point, 2204. I'm going to mark that in the chart, 22.04. And I'm going to make this line red so it stands out. There we go. Okay. Again, if you need information on how the early warning signal works, you can always come down here and click on the tutorials for it. But right now you have me. So we know that our trigger point is 2204. We also know that it's very likely that this stock is going to move down 5% if we cross this line. If we don't cross this line, well, no harm, no foul. That means the price should be at the very least consolidating, best case scenario, continuing to move up. But if it does cross our trigger point and it does move down 5%, if our trigger point is at 2204, 5% down would make it 2094. So let's set a line. Let's make this line gray. And I said 20.94. Okay. That's at the very, this is exactly where we should expect price to fall to if it crosses this line. So let's move forward in time and see what happens. I'm going to skip all of our remaining alerts. I'm going to zoom back in here to what we were looking at. Here's the date we identified, the early warning on 6/25. Here's our trigger point that was crossed the next day. Price eventually moves down and hits our 5%. Now in this case, price did bounce around here before having earnings and then move up higher. But I am not greedy, right? My original goal on this was 20%. It far exceeded that. Then I could identify the fact that price was incredibly likely to take a 5% pullback. And I sold the rest of my shares, or I would have sold the rest of my shares. Let's look at another example. Let's look at our American Eagle. So step 1 is we want to back out here, and we want to identify if this stock trends well while in either Endeavor or Discovery, just like we did before. So we know that it came out of Discovery, came into Endeavor. We can see here that this stock does have a history of trending. All right, that's just a mental check. Now I want to know when it came out of Discovery, if we had signals, and if we did have signals, what kind was that? Let's come up here, Expert Advisor. We're going to select green, attach, close, and let's zoom in. All right, we come out of Discovery in late September, early October, and we get our first green signal, green long-term trend. But you can plainly see we do not get a green 3, which means this signal was not confirmed. So when it falls here, we don't really care. We get another green signal here on 10/24, but once again, no green 3 followed, and price moves down. It wasn't until we get the green long-term trend signal on 11/14 that is followed up by a green confirmation that we see price start to move up. And we would apply that same philosophy on this guy. We'd come here, view, expert commentary. We'd come down. We don't have to apply our trigger point line because we can plainly see here that we did get our green confirmation. We know here that our risk was between 1320 and 1271. Get out of here. And we wanted to verify that we have at least 20% in this. So let's mark this high just as a reference. We'll zoom back in. On the confirmation day, the close was 1397. Let's back up here, and we can see that this relative high is $19. So we absolutely had our 20%. Get rid of my lines, put these back together. Okay, now let's switch this up a bit, because it's obvious that you're not going to want to jump here into Metastock and then start bringing up random securities and hoping that you hit it on the right day that these things had greens that came up. So with Metastock, you can run reports. And I'm going to show you how to do that right now. We're going to come up here, File, Close All, Save Changes, No. We're going to come up here to the Power Console. We're going to click on Explorer. And here we can run either a green signal on as many stocks as we want. You can run custom lists. You can run your own list. You can run the list that Metastocks give you, which are down here. If we come down to Equities, North America, here we can choose, we can run a scan on every stock on the NASDAQ. We can run everything on the NYSE. We can run everything on the Amex. So this gives us a choice between 3,000 stocks, over 4,000 stocks, 512 stocks. If you can't find a good stock to trade in there, well, you might not be a good trader. But which signal do we want to run on? We can run green, and that's going to give us that original arrow. And then we'll have to manually wait those 3 days for the closes. Or we can just run our Endeavor green confirm signal. This is going to give us signals that occurred on this day. Now, what day should we choose? Well, I've already ran a report here. I went back and I ran the date of 6/7 of 18. Now, why go back in time? Why not show you stocks that had green signals today? Very simply, if we do the ones that had green signals today, then we have to wait months to find out if they ever worked out. Or I'd rather show you examples on days that I'm familiar with. I say familiar with because I actually took one of the trades in this list. So I thought it'd be fun that I'll bring up the stocks, and then together we can run through all the different scenarios, and you can kind of get an idea of what we look for when picking a green stock. Because as I said before, every stock here that's going to come up does have a green confirmed signal, but there's just a little bit more of technical analysis that goes into it before we want to jump into one. So let's take a look at these stocks. Let's bring up 1, 2, 3. Let's bring up the first 4. Now, why the first 4? Why not these two? Well, this is a ProShare healthcare stock that's $91. I'm most likely not going to take that even if it has a good green signal. This PPH, I've traded in the past and never had a whole lot of luck with it. It's not a great trender. So I'm going to skip these two and I'm going to focus on these 4. Now, normally all you'd have to do is come up here and hit open chart. But since we want to know, what these stocks looked like on the day that they were confirmed, I've already brought up the charts, applied the Endeavor and Discovery template, and backdated. So we're going to be able to look at these stocks exactly identical to how we would have on the day that they got confirmed. So let's start with Blackstone. Open it up. First thing we want to do is verify we're on the right date. This should be 6/7, which it is. Let's back up. Okay, let's get our overview here. Let's see how price trades went in Discovery. Let's see how price trades went in Endeavor. We can see here that price had its major fall while in Discovery, and it's had its largest rise while in Endeavor. However, if you take a close look at this stock, we can see that this more or less trades sideways rather than a good, strong upward trend. Now, I'm a big believer in how stocks have traded in the past are absolutely going to predict how they trade in the future. So I know that this isn't a great trending stock. That's just a little mental check that I'll put, not the best trender. So let's zoom in here and let's let's go ahead. Let's apply our green signal because that's what we ran. And the first thing that comes up is our alert box, telling us that we have a green confirmation warning. Proceed with caution. Although today is the third consecutive close above green's trigger point, there has been irregular price movement that could affect long-term price action. These alerts are one of my favorite parts of this system. They told me that if I zoom in here and I come up here, view, expert commentary, I know that this green signal happened on 5/25 because that's what this says, green date, 5/25. Our trigger point was 31.63. I can mark that. 31.63. I'm gonna again make this a green line. Okay. Then we're waiting for 3 consecutive closes above 31.63. Now, we absolutely get those closes. It took a little while, right? This one took more than 3 days. We have to wait 1, 2, 3, 4, 5, 6, 7, 8 days, but we finally get 3 consecutive closes, these last 3 bars. But our algorithm identified that something has changed with this stock. So although originally it had the setup, it had the opportunity to potentially move up for the long term, this has said, whoa, whoa, maybe we should take a second look at this. At the very least, we did still get confirmed here, right? We did hold above this for 3 days, and you probably then took that time, and you did your fundamental analysis. And maybe you've been watching this stock for a long time. Me personally, I almost never go into these stocks if I get a confirmation warning. If I do enter them, what I always wait for is I start my count over, and I do it manually this time. I'll take the high of the confirmation day, so in this case, 31.88, and now I need 3 consecutive closes above that. Because if it can't at least do that, again, it is not likely to move up and make that large, strong trend. Now, if we continue with our analysis here, I wouldn't have been able to trade this stock anyways, because if you're entering at 31.70, the closing price of the confirmation day, and this high is just barely $33, I don't have my 20% anyways. So I said no. Let's move on to the next stock. We'll take a look at Foot Locker. We'll start by zooming out. We want to get a good long-term history here. We can see the price was in discovery. It did a decent stint in Endeavor. It popped back into discovery, a smaller entry into Endeavor, and then a larger entry back into discovery. Okay. Depending on how large or small these blocks of Endeavor and discovery are can also tell you how much or little of a stock a trender it is. The longer the times that you get in discovery, then that's more likely it's going to have had a long downward trend or consolidate for a long time. If you're in Endeavor for a very long time, well, then you are more likely to have trended up for a while. This stock is so-so. We can see that we get an okay trend here when in Endeavor. However, starting in 2017 into 2018, this stock has gotten incredibly gappy, right? We get 1 here, that's 2, then 3, and now 4, and we've pushed up from this most recent gap. That's not exactly what I want to see when I'm putting my money in a long-term trade. I don't love the fact that it has these very large gaps, but that's only part of my analysis. So let's come up, let's apply our green, attach, close, and we get another alert box. Again, green confirmation warning, proceed with caution. Although today is the third consecutive close above green's trigger point, there's been irregular price movement that could affect the long-term price action. All right, good to know. Let's say okay. We get a second alert, movement warning, proceed with caution. That's 2 caution warnings. Price has moved up too fast and could be overextended while the bars are red. Say okay. Well, we've seen this before, right? We saw on Seaworld what happens when you get multiple red bars followed by an early warning signal. These bars, when they turn red, are always going to identify that price is starting to get overextended. Now, if you were going to put the odds in your favor and take a long-term trade to make a minimum of 20%, would you want price to be telling you that it's overextended and could very easily fall 5%? No, of course not. That's the last thing that you would want. It is never a good sign when you get your green long-term trend signal and these red bars. That's always telling you that price could very easily be confused. So this is another trade that I said no to. Now, let's load our maximum data here and let's move forward in time and see where the stock is today. So here's our green arrow. Let's skip all of our alerts because we already read them. We know that our green signal occurred on 5/25. And then we got our confirmation on 6/7. We know that because that's how we got the stock. We ran the green confirmed alert. And we chose not to take this. Oh, there's another green confirmation warning. And we chose not to take this because of all the red bars. And what happened? Price ultimately fell. Looks like it might be cupping out here, but this is something that I'm just not interested in, right? Again, I want to jump into these perfect trades. I want my green signal, I want it to be confirmed, and I want to see it take off, just like we did with Seaworld, just like we did with AEO American Eagle. So let's move on to our next trade, or our next potential trade. Pandora. Okay, same basic step, although I'm going to start to do this a little bit quicker now because I think you're starting to get the idea. We can see that Pandora has spent a large amount of time in discovery. All right, so right off the bat, what's that mean? Well, that means we know this stock is going to be at a very relative low. So that's a check in the plus column, right? We want to buy these things when they're at lows so they have absolute potential to move up to their highs. My 20% criteria is just to make sure that I get a minimum of 20%. So now that we know that this stock has a decent ability to trend, what we can also see here though is it's not as gappy as the last one, but we do get little gaps here, right? We have a gap here, we have a massive gap here, and this is probably the one that's going to make me more nervous. Let's come up to our expert advisor. Let's apply our Endeavor Green. Green confirmed. It's the first time we've seen that alert. Today is a third consecutive close above green's trigger point. Okay. Let's move in here. All right, so we said that this does have a decent ability of trending. However, this gap absolutely makes me nervous. It also makes me nervous how close the beginning of this gap is to our original green long-term trend signal. And once again, the same day we got this green signal, we also got a red bar. So let's move back. Let's go back to 5/9 of 18 and see what this would have said. Here, I'll get rid of this. We said it was 5/9. Okay. This should be the day that the green signal occurred. We'll apply green again. And this time we're looking for our alerts. So our first alert says that price has entered Endeavor and is likely to develop an upward trend that may reach or exceed its all-time high. Watch for the colored signals that will predict specific price movement. Okay. Next, tells us that our green occurred. Well, we can plainly see that here. Price is likely to develop a long-term upward trend once confirmed. 3 consecutive closes above green's trigger point are needed to confirm the signal. You'll start to see that these alerts are really good because they're going to explain to you exactly what's going on so you don't have to guess. I'll hit OK. And here's another alert. This one we haven't seen before. Green gap warning. Proceed with caution. Price has recently gapped up and may consolidate until its next earnings season. This is incredibly useful information. This is telling me that this gap was, and we also get a movement warning, but we've already read that one. The gap alert is telling us that this stock most likely had earnings. It's not a definite, I'd have to look it up, but anytime you see a gap that's this large, that's most likely going to be earnings, which means we got our signal 1, 2, 3, 4 days after this stock released its earnings. And now we're getting alerts that tell us that this stock may consolidate until its next earnings season, meaning that we can go multiple months with this thing moving sideways. Once again, that is absolutely not what we want. We want to make sure that when we get these greens, that they're telling us, yes, go in. The stock has a history of trending and they take off, making us our minimum of 20%. What we don't want to be seeing here is information like this. So let's do the same thing we did before. Let's load all of our data. Let's see where Pandora is trading today. I'm going to skip all of our alerts like last time because we already read them. This was the day we were just looking at, 5/9, the day that the green signal occurred. This is the great day that we did get a green confirmed alert, but like I said, not a great sign that we started to see these red bars, and we also got our gap warning here, telling us that price could very easily trade sideways until the next earnings alert. And that's exactly what we saw here. Price did nothing but move sideways. It had the potential, it had the opportunity, I should say, to move a minimum of 20%. This thing could have far exceeded 20%, but our alerts kept us out of this trade that ultimately went nowhere. Now let's look at our last example. DDD. I'm gonna do the same thing that I've been doing before. I'm gonna back this up and I wanna make sure that this stock is a decent trender while in Endeavor and Discovery. So we can see that it spent a little bit of time in the Discovery, but it spent more time here in Endeavor. And when it did, it had pretty good upswings here. So we get a pretty quick, fast movement when in Endeavor. When it was in Discovery, it traded a little bit more choppy. Here's another gap, but it's been a while since it's gapped, so I'm not that worried about this one. Let's zoom in. Let's go up here. Let's apply our expert advisor green, attach, close. And let's start reading our alerts. Green confirmed. Today's the third consecutive close above green's trigger point. Perfect. It's exactly what we want to see. Okay. No remaining alerts. That's the first time that's happened. Also, we can see here when our green signal occurred on 5/17, there are no red bars to be seen. Okay, this guy's starting to look good. We'll come up here, view, expert commentary. Let's just double check our trigger point, 1312. I'm gonna put a line on the chart representing that. Again, we're gonna make it green. 13.12, okay. I'm gonna scroll down here. I'm gonna get my long-term exits, 1135. I'm gonna place my line, 1111.35, okay. I'm gonna place another line representing my bottom level, 1062, 10.62. Okay, so I'm gonna close out my commentary. I know that I had my signal. It was confirmed. There are no red bars. I also know that this stock has a history of trending. Also, if we entered here at the close of the green confirmed day on 6/7, price is at 13.89, which means 20% upside would put us at 16.67. Okay, that is 100% doable. The most recent high on this guy is right around $24, which means if we come up here and we actually hit our 20% qualifying or minimum projection, we're also very likely to fill this gap. That's a great sign because that means that this stock doesn't have to stop at 20%. It can absolutely move higher. Now let's do the same thing we've been doing. Let's load maximum data. Let's see how this one would have worked out. Well, here we go. I'm gonna zoom in here a little bit more. Get rid of all of our alerts. We'll zoom in more. We entered at this date at 13.89, which was the closing price. I'll get rid of that alert. And price eventually moved up, exceeding our 20% projection. Now, I'm sure you could tell through the analysis that 3D Systems was the stock that I picked. This is the trade that we were in. So I can tell you what I actually did, and then I can do a little analysis on it and tell you what I probably should have done. Now, I sold everything as soon as I hit my 20%. I'd been waiting on this one for a little while. This one didn't immediately start to move up. So when I got my money, I took it and I ran. However, this stock absolutely has a history of trending. And like we said earlier, when it does trend up, they seem to be these very large spurts. So if I would have held on to this, I would have made a lot more money. well, I would have had the potential for making a lot more money. However, the thing to always consider is I'm not that upset that I didn't hold on to this, because what you always want to keep in mind is that, like we said earlier, until you sell the stock, the money's not really yours. So I had a plan to make 20%. I crossed that 20% line. I sold out. Price moved higher. That's fine. I'll move on to another stock. All I have to do is come up here and run another green confirmed report. And it's going to give me a whole nother batch of stocks. Okay, so let's recap. We talked about how our green signal can pinpoint the best times to take a long-term trade, how our alerts can help you adapt your strategy because of the changes in the market, and we saw how you can find long-term trades in under 15 minutes a day by using the Metastock screeners. So now we move on to the moment you've all been waiting for. How much is this system going to cost? Surprisingly, not that much. The Endeavor add-on is offered as a subscription service through Metastock. You can sign up for the monthly plan and pay $99 a month, or you can sign up for the yearly plan and pay $10.69 once a year, which means you have a savings of around 10% on the yearly plan, which comes out to be a savings of $119 a year. Now, in the beginning, I told you that if you committed to us, we'll commit to you. And here's what I meant by that. If you sign up for the yearly plan, you not only get the $119 discount, but you're going to get an extra month. So that's $10.69 for 13 months. You'll also be invited to join our monthly webinar series absolutely free, where we talk about the markets, which sectors and stocks are moving, and which ones to stay away from. Then we go over all your questions. We want to work with you to make sure that you're getting the most out of the Endeavor system, because we know that it's very important that you make back your $10.69. So we're going to help you do that with these webinars. I'm a big believer in the idea that people learn better together in groups. So this offer will never expire. If you're watching the recording of this, you can absolutely take advantage of it. For those that are interested, all you have to do is go to sts.whatsendeavor.com/m. You know what? I'll show you. Let's come here. Once here, all you have to do is scroll down to today's bonus, sign up for the annual Endeavor subscription, and get access to the webinars plus more. You click Get Bonus Now. You're going to come to our landing page on Metastock, where you can use our promo code SimplicityTradingA and call either the Metastock number, or if you want to sign up online, you can come down here and you can select Simplicity Trading Systems Endeavor Annual Subscription. If you don't already have Endeavor, you can do that here. And then all you have to do is click Order Now, or again, call the 1-800 number. Then once you've done that, all you have to do is send us an email with your confirmation number to about@simplicitytradingsystems.com, and you'll be invited every month to our interactive webinars. And if you ever have any questions, remember, don't be shy. You can always send us your questions to that same email address, about@simplicitytradingsystems.com. Okay, I'll leave this page up so people can see the web address, but I will turn it back over to Jeff.
Okay. Well, I don't have much to add there. Good job, Ryan. For those of you that want to go ahead and get involved, give us a call. You can give us a call at 800-882-3040, or you can visit sts.whatsendeavor.com/m, and that'll help you get set up. Other than that, Ryan, do you have any final thoughts?
I'm good. I was just curious if anyone had any questions.
We had a question a bit earlier saying, does the system apply to indices or mutual funds?
So we suggest that we usually tell people it works best with stocks, ETFs, and REITs.
Okay, there you go. So ETFs, that would apply to index ETFs as well.
Correct.
Okay, awesome. That was the only question. So want to say thank you for everybody for coming, and we'll see you at the next one.